C3.AI is down nearly 80% since its all-time high this time last year, and they're down about 25% since their IPO around $42 a share. So the question really is C3.AI worth an investment? Hey everybody, Frank Finance here. Hope you're having a wonderful day. In today's stock analysis of C3.AI, ticker symbol AI, we're going to be going over the price target, Q2 earnings, a business description. We're going to look at the fundamentals and financials. I'm going to look at the price history over time, and then I'll give my final thoughts for C3.AI as an investment. If you're new to the channel, please consider subscribing. I do videos on personal finance, investing, and stock analysis. And those who are returning, thank you so much. Now back to your content. All right, so my price target for C3.AI is $40 to $50 in the next 12 months, indicating a 33 to 66% upside. Right now, the shares are selling about 25% down from where they IPO'd at, around $42. Now, there has been a lot of extreme volatility. The stock went all the way up to $150, $160 a share, and traded around the $60 to $70 for a period of time, and recently dropped into the $40 range, and now has dropped down into the $27, $28 range. So there's been a lot of volatility with C3.AI since its IPO. We're going to talk a little bit more about that. When I did my original stock analysis back in March of 2021, I actually had a much higher price target. I'll go ahead and show that right here, indicating, and the downside on that was around the price target of around, not the price target, the IPO of around $42 a share, and it's actually gone significantly below that. C3.AI released their Q2 2022 earnings on December 1st of this year. Now, the GAAP measure for earnings per share came in at negative 55 cents per share compared to analyst estimates of negative 41 cents per share, or they missed it by about 14 cents, or around 34%. On the revenue side, they reported $58.3 million. They beat estimates of $57 million by about $1.3 million, or about a little over a 1% beat there on revenue. All right, jumping in the press release highlights. So they had $58.3 million in revenue, an increase of 41%. Revenue guidance was raised to 35 to 37% growth for FY 2022, up from 17% growth in FY 2021. Now, the statement from the CEO said, "We closed another strong quarter, increased revenues by 41% from a year ago, and exceeds our guidance and sell-side analyst expectations." They expanded a key relationship with Baker Hughes and locked in and increased the value of that engagement. And they further diversified their AI product footprints across many industries and continue to innovate the delivery of C3.AI data vision that fundamentally reinvents the enterprise software user experience. All right, so for a few highlights, the revenue was up from 41.3 last year to 58.3, or a 41% increase. On the subscription revenue, that was up from 35.9 to 47.4, a 32% year over year. And gross profit was up from 31 to 42.3. And as they're saying, they significantly beat analyst expectations for the quarter. All right, jumping into the slide presentations. There again, revenue was up 41%, subscription revenue up 32%, gross profits up 35%, remaining performance obligations up 74%, and non-GAAP RPO up 74%. If we move on over to revenue, you can see that the revenue growth rate has been pretty solid over the last several years. If we go all the way back to 2019, we're looking at $22 million in Q2. For 2020, we're looking at $39 million. And then we had a pretty flat year last year at $41 million, and we saw that big increase up to 58. So we saw 22, 39, 41, and 58 for the last Q2s, the last four Q2s. Going into total revenue mix, we saw that, again, their total revenues increased, but if we look at it as a mix, subscription revenue versus professional services up about $5.5 million, and subscription revenue making up the remaining of a percentage. And you can see the mix has been, the total revenue on the subscription side has gone down from 87% to 81%, and professional services is obviously making up that gap. Now on the non-GAAP gross margin, let me make this a little clearer to see. You can see that the non-GAAP subscription gross margin has remained the same from quarter to quarter. And then the non-GAAP total gross margin has actually increased slightly. All right, now it's important to keep track of expenses. So if we look at their expenses as a percentage of revenue, you can see it went from 99% of their revenue up to 117. So they're spending more on their operating expenses than they're getting in revenue. You can see their sales and marketing has increased from 48 to 56, an 8% increase. You have a research and development has increased by about, 7-8%. And we have a increase in general administration by about 3%. Now, one thing I don't like to see is the operating income and margin continuing to decrease. So this time last year, they had 9.3 million in losses. They had 22.6 million in losses for this last quarter. It's got to be guiding close to $100 million in losses for the year. If you're looking at the operating margin as percentage, 23% versus a negative 39%. So pretty big decrease there. Now, if we look at guidance for full year 2022, you can see that it's between $248 to $251 million in total revenue, or a growth of about 35 to 37% from fiscal year 2021. You can see the non-GAAP loss from operations is going to be guided between losing $108 million to $100 million. We just talked about that. So they have been increasing the amount of losses they had over year, even with the substantial increase in revenue. And a large percentage of that is they're just continuing to spend money for sales to get this out there, as well as that R&D. But you can see there's slight increase in G&A. Now, C3.AI, as the ticker and name implies, is an AI-based software company based out of North America. Its software includes C3.AI Sweep, which is a platform as a service for application development and runtime environment that enables customers to design, develop, and deploy enterprise AI applications. Now, it has several other products. I think they have Ex Machina, and they have C3.AI CRM, which personally I think is one of the better offerings in their portfolio for future growth, just because I know the CRM system, and I think it has a lot of potential to add AI into that mix to provide additional value to industries across the world. So I think that's one of the good opportunities for them. But all in all, C3.AI is mainly focused on artificial intelligence software. All right, looking at the past year financials, in 2020 they had $156 million in revenue to $183 million in 2021. Now, full year 2022, fiscal year 2022, they're anticipating $250 million in revenue, or about a 35-37% growth, up from about a 16% growth rate the year prior. Now, looking at gross profit, that increased slightly. EBITDA actually increased, which is good to see. Net income also increased from 20 to 2021. Now, I believe net income is going to decrease from 55 to around 100 million. So, although we are seeing a really nice uptick in the revenue side, we are also having a lower earnings per share. I think a pretty significant decrease in earnings per share. Now, I always like to look at free cash flow, but obviously since C3.AI is not making any money, their free cash flow is negative. So again, in 2021, they had 37 million minus the 1.7 in CapEx. So obviously a negative free cash flow, and we expect the same for full year 2022. Now, I looked in a couple different places for shares outstanding because it didn't look right in a couple different places, but on Y charts, this probably is more realistic. Looks like shares outstanding has increased slightly in the last year, from about 95 million when they went IPO, all the way up to 104. So about a little over a 10%, 14% change there. Now, looking at the price history for C3.AI, C3.AI IPO'd about this time last year, and their IPO was supposed to be around $42 a share. They closed up on their IPO around $100 a share and quickly shot up to about $170 a share at one point, or about over 73% from where they kind of opened at, or really about 4 times where the IPO price was about $42 a share. Since then, the stock price dipped, went back up to about $160 a share, and since then it's really decreased quite substantially, all the way down about 82%. Now, I did my first stock analysis around March of this time, and we saw a big dip here. And this is when I first bought in. So personally, I was down about 50% on my position in C3.AI. So I've taken some significant losses, and I'm still holding on to those shares. I haven't sold them yet. I actually picked up a few shares recently, sub 30, and currently I plan to hold those for a little bit longer up until they get around that $40, $50 range, which I believe is a realistic price target at this point. Now for my thoughts on C3.AI. Well, after their earnings call, the stock dropped about 20% during the middle of the day. At this point, it was about 25% lower than their IPO price, which I thought was a fairly good value for C3.AI. However, this does still represent some significant risk for C3 moving forward. Now, a lot of analysts, and the reason for the drop post earnings was analysts came out and lowered their expectations for C3.AI, and they lowered their price targets accordingly quite significantly, looking like the average is somewhere between $40 and $60 looked like the average estimates, the ones that did change here recently. And they were pretty significant drops, somewhere from like the 80s down to the 40s. They were large percentage drops if you're putting them in the dollar value. So there was some significant concern from the investor community on what C3.AI is going to be able to do in the next 12 months, as well as the stock price. So looking forward, going to a net income positive for C3.AI looks to be a several year deal for them. Maybe 2, maybe 3 years out in the future till they even are sort of net income positive. Now, when that does happen, their price to earnings is going to be quite substantial. In order to get anywhere close to a reasonable price to earnings, they're going to have to be making a net income of about 200 million, in which case, that's their almost, a large majority of their net income, 80% of their total revenue right now, because they're only going to be making 250 in this current year. 250 million in net income to kind of have a PE of around 20 is quite unachievable in the next 2-3 years. That's just not going to happen. Can they grow their revenues up into the $500-600 million range in the next 2-3 years? Probably not. 5 years? Yeah, that's possible. So C3.AI is going to have several more years. And again, their margin on their subscription is quite high, quite high. Their professional services grew substantially, which is good to see. It means they're bringing on new clients, or existing clients are having them build on to their existing products, and that's good to see that spending increase there. What we're going to want to see is that professional services increase even more and become a larger percentage of their income as more and more clients, as more and more folks decide to bring on and increase what they're currently spending with C3.AI. That's what we're going to be wanting to see in future quarters. As time goes by, we're going to see margins increase as the subscription dollar amount goes up. So that's what we're looking for. Now, C3.AI has a really good platform. They have a lot of good things going about them, but it's going to be several years before this starts to build out and look like a very financially stable company. Until then, we're going to have a company that's burning through a lot of cash and isn't really returning that value to shareholders. What we're going to be wanting to see is growth, continued growth in the business, as well as user adoption, and see that professional services increasing, which translates into high margins on the subscription side. If you like this type of content, please consider subscribing. I do videos on personal finance, investing, and stock analysis. And if you found anything helpful throughout this video, please hit that like button. It helps me out a lot. My name is Frank Finance, out.